Okay, we're live and direct. All right, yeah, so we up and popping. All right, we're live. It's been a minute, but what better day to come on for a little while here and discuss the market, considering what we're getting, in this, call it what it is, market sell-off, right? The market is getting beat up heavily today. And I want to spend at least a couple of seconds, not a lot. I didn't really plan for this. It was just kind of impromptu, spur of the moment. I got my little fuzz going, so forgive the brother in the hair. Y'all know how it is. Got a little hair stuff going, right? But again, what better topic or discussion or a moment to come together for some of you guys that are trading the market today, or may be watching from the sidelines and seeing all this erratic movement that's happening. In the Dow, the Nasdaq, and the S&P 500, this immense sell-off after having such a rebounding, moment yesterday, when Trump literally, walked back, those 10% tariffs that he had slated to go in effect September the 1st, where he pretty much just walked up that entire statement back because he realized that the Chinese government, pretty much wasn't going to be moved by the idea that, these extra tariffs were going to be any kind of form of a threat to their overall, aspect of their well-being at this juncture in the trade talk, or the trade war value of itself. And so what you have here is a moment where now you're starting to see the political, hyperbole being frothily spewed around across different aspects of global economic environments, to the tune where it's affecting people's economies, because you have two superpowers, the two biggest superpowers pretty much on the planet to date, are somewhat back and forth in this kind of verbal sparring of who can blink first in terms of who can levy the worst, the worst slander campaign or talking point against the other country. Yet they're also doing this in tandem in aspect to, at some point, come to the table like adults and relinquish a trade deal from this whole ordeal. Now, in the interim of that, you're having the markets, reflected in a whole lot of volatility, right? Markets are up one day, down the next. Very, very, very bipolar environment right now. And it's making it hard for some traders to really understand, how they should position themselves, in the market day over day, how they should trade, what they need to look for, how to make sense of all this, right? And one of the main things you got to realize as an investor or pretty much a day trader, some of you guys that do that, or a swing trade or whatever value that you trade, access in the market, is that, there's no one cookie cutter mode value or data point that pretty much determines the overall aspect of how you should be governing yourself day to day to invest in the market. The one thing we know to be empirical above all things is that, the White House, in a sense, or those who are control a lot of the powers that, that really move the markets, are pretty much the front runners in controlling the sentiment, so to speak. And that's one thing we can know, we all can hang our hats on, is that if we get a Trump, tweet, or we get some kind of form of news publication coming out of China about how they disagree, or they're going to push back, or they're going to, not do something in relation to the, deals that they have on the table, well, those talking points or those data points move the markets. Those things have been, pretty much solid since we started in this trade war. And so, what that does, not only does it mess up the ebb and flow of the market from day to day values in terms of how moving averages and time horizon option contracts are being footed into the market, which offers that volume of buyers or sellers obviously caused the market to kind of move in the path that they would like it to go, is obviously up and to the right. But however, of late, you've been getting a lot of whipsaw action, right? We call that flash crashes and flash spikes out of the blue, which is not healthy for investors who are day trading. Well, not necessarily for day trading, but for those who are long-term investing, right? Especially if they're just not coming into the market, right? Because they're coming in on a 700-point swing to the upside, and the very next day, right, they're buying way up there at these top prices because no one's really kind of showed them how to be careful, how to scale into their investment. They're buying at the very, very tip up there, and then the very next day, they're down 700-800 points, right? Their entire position is down 10, 20, 30, 40, 50%, whatever the case they may have invested. And so again, I just want to kind of come on briefly. Again, I do look forward to kind of getting back on the mainstream value, doing this stuff day to day. As you guys can see, I'm somewhat pretty much almost acclimated into my new home reality. I've been saying I want to be there about a couple of weeks ago. Not necessarily quite there, but I'm close enough. Again, I'm about, last time I was around about 86%. I think now I'm around about 91, 92%. Foundated, with all the things I have to take care of now, because I got actually a little bit more new responsibilities now since we moved into a new area in relation to my home front. But outside of that, I still want to be able to, at some point, compartmentalize all this stuff and then being able to bring it to you guys, from a very responsible aspect of saying, hey, we're going to do 3 days out the week, and these are the days we're going to do it on, right? Or 2 days out the week or whatever. Either way, I want to be able to provide some kind of value of continuity so we can have a place to kind of come on, discuss these kind of things in real time that may help some of you guys out or ladies out who are trading the market in real time to benefit from it. Whether you get it from me or someone else, but there's always good information being disseminated when people can come together and think tank their way through a market, especially like today, when you get the Dow that's down over 740-something points, S&P down near 80-something points, to that regard, $8 or whatever. And the Nasdaq is, I think, somewhere roughly around maybe 200 and something points right now. So again, the market is, taking a shellacking today. A very, very abnormal shellacking today in the aspect of what the bullish traders who have been very invested in this market over the past year or so, especially a year and a half, and haven't necessarily taken any kind of profit off the table, they're actually reaching the peak point of volatility where you're starting to see some real uncertainty starting to kick in and rear itself back in the market. The VIX volatility indicator is starting to spike again when it was kind of left for dead. Over the past couple of months, we had VIX down maybe like 12 or 13 at some point. Today is well over 22 plus, literally overnight, because of all this new uncertainty that's happening in the market. Well, today's culprit or catalyst thereof is the yield inversion, right? We had the 30 and the 10 and the 2. A lot of you guys can look this stuff up for yourself. That's new to understanding how yield inversions, when they happen, meaning short-term debt obviously eclipsed that of long-term debt, or long-term debt eclipsed that of short-term debt, then we have a problem, right? That typically spells that we are, somewhat in the forefront of, moving towards a recession. People are starting to default on, on loans that should have a maturity aspect to it, where you will have enough time to be able to kind of pay those things off, where it shouldn't be a big issue, basically what that means. So the bond market, or the treasury notes of this pretty much economy, of American economy, they're at the lowest levels they've been in historical aspect of their in their value or their tenure as being publicly traded assets. Right, we hit a low, I think, on the 10-year the other day. I think the 10-year or the 30-year note down like 1.6, and anytime it gets near 2 and under, that's when you want to start being very cautious of what's happening. So it hit an all-time low literally a day or so ago, which raises a lot of problem about American debt. So what that really means, okay, I put it in layman terms, America's defaulting on that debt because no one is starting to buy it up. See, other countries come in and buy up the USD dollar or buy US debt because they know it's a check that will come back, paid at some point based upon the value of our economy, the GDP that this country amasses and produces. And so people know they'll get paid, on these values of debt notes. which is the bond market, basically what it is. They make money off people defaulting on their credit cards, student loans, houses, this, that, and third. I know it sounds wicked, but that's a part of the bond market because they know every day, someone obviously may hit some kind of form of economic hardship, and then they kind of fold, and obviously that debt gets attributed to the GDP, the national debt value. And then people come in to buy those debt notes up, and then they benefit off the yield that they may return, maybe 2%, 1.6% on that, 1.7%. All right, and they'll be fine with that. Excuse me. And that's a lot of money if you're dealing with millions of dollars, right? 1.6%. That's a lot of money. So basically, again, what that does to the overall equity markets is it puts a lot of what they call aggressive paper, as they call it, aggressive paper, aggressive money, somewhat on pause a little bit, because you don't want to go into an asset that may also be subject to that same credit rating value of or bond apparatus, to the point where if they don't perform properly, they can also end up in junk bond status, and which will cause equity investors in that company to lose profit if the company starts to reel back some of their growth, because they can't necessarily supply their product or their services to the paying customer or the consumer, right? Y'all know how this stuff goes. It's a cog, right? It's the wheel of life, right? You got supply and demand, right? And if there's any kind of imbalance in that wheel, well, that throws off the whole overall apparatus of the machine. And so that's what we're having today in the yield inversion, where, again, you guys have heard me speak about this before in the past about yield inversions, your yield inverted curves, how that relevant, how relevant that is in terms of the equity market, because again, now you're talking about people starting to default. So if people starting to default on debt, that means they ain't got free money to spend on what? Goods and services. Then all these companies like Apple and McDonald's and everybody, well, some of these companies are what they consider to be recession proof, but ultimately that means people are going to be tight on their spending. And if people are tight on their spending, well, what does that do to all these companies who base their entire existence off a sort of head count of people buying their products month over month to kind of equip their book value to reflect that value of growth that investors look for to invest in, right? So if they start to see there's a slow value of growth, then you may not be the best investment right now. Well, I might wait till your price comes down a little and get a little bit more cheaper, more attractive, and then I'll come in and start kind of adding some dry powder to your books as an investor. And so again, I always tell people too, that's why it's important to study the fundamentals of trading. Don't get too stunts in understanding technicals only. Devote some of your time to understanding the fundamentals of the market too. Geopolitical news, right? Because these things affect our market. If they don't, we wouldn't be here today down there, 700-800 points on the Dow, right? Complacency set in, right? Now there's capitulation in the market. I can honestly say, finally, today, there's actually capitulation happening in the stock market, where people are very somewhat nervous today. Before, they've been getting bailed out by the Fed. They got bailed out. They keep getting bailed out by the Trump talking points. And one day he's feeling this way, the next day he wake up maybe in a different mood, grumpy, and send the stock market crashing 300-400 points, only behind a tweet, right? So there's opportunity and money to be made, at any aspect of this, though. That's why I love what we do as investor traders. We're just opportunists, right? We remove our feelings, we remove our emotions as much as possible, and we think from a very strategic, battle-hardened soldier, right? We look at every aspect of the opportunity, every aspect of the battlefield, analyze everything we can to our ability, and then we make decisions based upon that, with the strongest psychological disposition, because that's what matters. You have to have a strong psychological disposition to be able to day trade, number one. But number two, to be able to understand the overall market sentiment, how other investors may be thinking at the same time that you're thinking, or having thought about a certain trade, stock, whatever. And so again, I just want to keep reiterating that. I know I haven't been on in a while, to the point where we kind of hammered this stuff in, because y'all know one of my biggest pet peeves is being absent of a strong psychological disposition. If you're gonna come into the market as an investor or trader, you have to have a strong psychological disposition. That's the secret ingredient to being a really, really good, consistent, profitable trader. Indifferent when it matters, strong in your business acumen in terms of learning how to reference certain data points to get the best quality information before you submit for a particular trade. And then the rest of it is just the technical, pushing the button. But ultimately, we have to be very, very secure or convicted in our research methodology to make sure that we're finding the best and most pliable information before we place that trade. A day like today, where you got stocks that are falling, reeling back 3%, 4%, 10%, 20%. Some stocks are falling that much today because they were at a higher point on the chart value in terms of the 52-week chart history value, and now it's time for people to say, well, we're going to run the stocks that have the biggest percentage gain over the last 6 months, 3 months, last year or whatever, and we're going to take profit in some of those stocks if we're sitting in them because we don't know what tomorrow may look like. Right? We did well on this investment. We already up 30, 40, 50% on our investment. Some of them over 100%. Okay, these are the ones we're going to trim first. Now, in that moment, those are the stocks that if you are understanding how to play both sides of the market, guess what you do? When you go find those same stocks and you buy puts against them, or you sell calls against those positions because the volatility is going to be so great in some of those, and the price is going to come down by natural value of the market coming down. The Dow, the S&P, the Nasdaq, whatever, and some of these stocks are weighted heavily in these indices. These are the ones you want to look at. So there's always, again, a plan or procedure that you can implement to benefit even on days like today. And if you only know how to trade one way in the market, meaning you only can trade up and to the right, like a bull trader, then again, there's nothing wrong with that, but that can also become a detriment to you at some point because now you're stuck trying to find a needle in the haystack of a pool of assets that you can particularly trade to give you some kind of form of a benefit when everything is selling off around you. And the people that are making money at this point are people who are short selling into this. And then they'll look for weakness later when stocks begin to bounce again and probably go back up. Then they'll buy in and go back up to the upside. But one thing you should never do is try to force the market to do what you want it to do. Right? You have to trust the process. Y'all know I'm a big stickler of that. I'm always telling people, trust the process. Never get ahead of yourself. Never try to get ahead of the market when it's clearly showing you or telling you what it's trying to do. Now, some cases you can, I get granted, but moments like these are what they consider to be anomalies, right? They're very abnormal in their projected value because you didn't wake up today thinking the market's going to sell off by 800 points today. I'm pretty sure no one did. Especially what they saw yesterday when the market rebounded from Monday's so-called small pullback, about 300 points, 400 points, and it rebounded a little bit. Tuesday, you get a tweet or from Trump or the White House comes out and says, again, we're going to backtrack our statement on the 10% tariffs and prolong them or delay them to the December timeframe because we don't want the American consumer to have to carry the weight of paying this extra tariff fee for their Christmas shopping that's getting ready to come up in the next 3-4 months away from now. Now, mind you, it's the middle of August, and he's already walking back that statement. He just literally levied that 10% threat over China literally a couple weeks ago. And he's already backtracking his statement. So number one, that shows that he's very unstable. And then number two, the people around him are not necessarily that educated properly that will allow him to go out there before the general world like that and make such a incendiary statement like he's going to raise 10% tariff as a threat to a global superpower in China just to kind of force their hand to the table in terms of trade talks and things of that nature. It was a very piss poor strategic move that he tried to implement that actually backfired in his face. And so instantly what happened to that, other global markets out there, and then even some here in the United States, punished President Trump today. Make no mistake about it. He got punished today because he walked back that so-called grandstanding 10% tariffs against China because they didn't buy agricultural goods, this, that, and third. They didn't keep up their end of the bargain. They're punishing him today because of that. Hence, they're allowing the yield to get inverted. They allow the bond market to sink even lower when it was already at red flag levels to a degree. So this is their pushback against him playing with their money, right? It's one thing they say, don't play with my, my wife or my spouse or my husband, and don't play with my money. Well, people mean that because again, a lot of people got a lot of their financial livelihood wrapped up in these markets. Now, granted, it's the most lucrative market on the planet. We get that. Again, no market out there more lucrative than the U.S.-based markets, where you can, again, it's unlimited amount of money you can make in this if you're obviously on the right side of the trade, much as possible. But granted, there are going to be days like this where you have to learn how to audible your value of trading, your style of trading. You might want to pull back from your margin account, right? You already know a lot of people blew their accounts up today. That had margin accounts, their accounts got wiped out. Meaning they didn't get to them fast enough when the sell-off started really happening to close out their account or close their trade. I hope they had stop losses. That you always hope they had their fail-safe mechanisms in play. Hence, we always talk about stop loss, stop limits. Trading, trading stops, all the kind of things like that. When you make money, you got a trading stop, but stop loss, this, that, and the third. So in the event something like this ever happens, you're not near your computer, your cell phone, laptop, whatever, you'll at least walk away, to live to fight another day. You want to get completely wiped out. But y'all know a lot of people got wiped out today. And it's very unfortunate. And this weighs on the psyche of people when it comes to, again, how they align themselves with these different, religious factions, so to speak. That's what they are, they factions to me. People call them political party. I don't subscribe to that stuff. That's another concept for another day, right? But either or, a lot of people got hammered today because of this conversation. That's back and forth between, President Trump and President Xi of China, or Xi of China, whatever. And more so, it's because Trump character will not allow him to think more level-headed in aspect of his even ability to leverage his weight as a U.S. president against China. What China's starting to do now is starting to see, you barking a lot more than your bark is really kind of, you barking more than your bite is really actually kind of trying to professing here, right? And people don't feel so moved or threatened by the value of him, making these kind of threats day over day, every other day, every other week, whatever. So they're starting to realize that now. They're calling his bluff, basically, and they're starting to call President Trump bluff. And I say president only because it's the value of the title, not because I ascribe to that reality. I'm just being politically correct for this moment. Ultimately, though, again, these are the moments where you want to be, as a trader, very, very cautious, and you want to be very, very convicted before you place a trade, and especially hold it overnight. And you say, well, why do you say that, Brother Afurakan? Well, case in point, what happened Monday? What happened Friday of last week? Coming into this week. And then what happened yesterday? Now, reference that to today. You had well over a 1,000, almost now 1,200 point swing in the equity markets in a matter of 3 days. Sometimes that don't happen in weeks in certain markets. Around the world, that don't even happen in almost a biannual aspect of an entire year in some markets. But we had that amount of volatility and movement in the equity markets here in a matter of 3 days. Not even 3 days, because you don't really count the whole 24-hour rally in stock market, because we have 9:30, obviously you don't use 4 a.m. aspect. 9:30 to 4 a.m. Then again the 9, the whatever. It's less, basically it's less than 36 hours in actual trading time. Less than 36 hours, you'd have had well over a 1,200 point move in the equity markets. Unheard of. And those who are poised to take advantage of these opportunities are the ones who's making money right now off these opportunities in these swings like this. But one thing you have to make sure that you relinquish out the gate when you're trading this level of volatility. Number one, erase your ego. Number two, erase emotion. Number three, understand that you are an opportunistic trader above all things. And if it's moving and it's providing opportunity in a way where you can, trade it responsibly, then that's a decision you have to make on your own. But the opportunity is there. But don't be so stunned because you may have taken a loss because, you know, Trump is screwing everybody. You know, this ain't just small retail traders like you and me. This is people down on Wall Street that's going through this too, that's dealing in hundreds of thousands of dollars in six-figure trading accounts, seven-figure trading accounts, eight-figure trading accounts, nine-figure trading accounts, hedge funds, market, you know, banks, this, that, and the third. And so again, today they're punishing him because of this. People don't, you know, again, y'all know I'm deep into the political aspect of the psychological aspect, how that reflects back to the market. But this is a form of them sending shots at him by allowing this yield inversion to happen at the level that it did, and they just letting the bond market just plummet to dang near zero. This bond market ain't never been this low. Literally, we talk about decades. Well, you will say, well, how is that even possible when the stock market is skyrocketing and it's almost, you know, still near all-time highs? Well, how are you having a big deficit in the bond market? Because what happened is the skier has gotten ahead of the skis. To put it in a parable sense, just to kind of put it, paraphrase it, the skier has gotten ahead of the skis. And because of that, again, with all these people who just been, you know, under the Jim Cramer theory, bye, they wasn't planning for the rainy day. They wasn't hedged properly. Typically, how do you hedge the equity markets, right? So if I pose that question to the family that's in the back chat right now, I'm seeing you guys coming in. What's going on, family? I see everybody here. You know, what is the ultimate hedge against the equity market? If anybody know the answer, post it in the back chat. We'll have a quick little lesson on this real quick. How do you hedge against buying stocks and stocks alone or the equity market? What else can you buy to hedge that market? Right? We talking about a very lucrative market in terms of U.S. stocks, whatever. Well, how do you hedge yourself in this market? If you ain't buying like stocks of Macy's, 100% right over Gordon, bonds. You buy the bond market. Now, it may not yield you the capital percentage value gains that you can get from trading a stock like McDonald's or, you know, an Apple or whatever, because, you know, the value of the growth is you know, could be profound, right? But, you know, that's a safe bet to kind of also hedge against equity markets and put your money in days like today, when you would think when the market is, you know, if equity stocks to sell off, then the bond market should be going up. But that's not the case today. Both of them are selling off today. And some of them at certain treasury notes are rising when they should be falling. That's how you have yield inversions, meaning certain values of the 30-year or the 10-year note or the 2-year, right, might be up when they need to be down. That's how you have yield inversion, meaning people are starting to default on certain aspects of debt that should not happen at this juncture of their contract value of how they, you know, go out and procure different aspects of credit to leverage their life with. So people are, again, folding. You know, so again, it's very important, again, for us, especially for us, if nobody else, that we realize these moments and these opportunities that are there in the same breath. Now, again, it's a gift and a curse reality in some aspects. But again, we're emotionless in this, right? We're emotionless in this because, number one, we're opportunists. Number one, above all things, we're opportunists. So we don't get caught up in, oh, I'm a bull and I'm only a bear. No, we're both. We're symbiotic in this. You have to be balanced, right? There's nothing in life that's natural that doesn't have a diametric opposite to it. That's the balance of life. And it's the same reality when it comes to trading the U.S. equity markets. And so in a moment like today, you see how important it is, how very important it is. Look at my alerts going off. I had so many alerts going off today, guys. It's just been stupid crazy. Like, I have alerts that I had set back 7, 8, 9, 10 months ago. Some of them over a year. And certain stocks, I mean, if they ever got to this point, I'll start looking at the stock. Literally, my alerts been going off like crazy today, you know, on this sell-off. Stocks I had almost literally forgot about, because they had been, that long. But again, that's a part of what we do, again, as traders and investors, how we also timeline our opportunities out based upon, being able to set attractive price targets for us to kind of go out there and acquiesce these certain equity stocks or whatever that we're trying to trade. So again, look, y'all hear it going off. Again, it's on the back end of the day, and I'm getting stock alerts on my black box scanner. You rarely get alerts like that on this time of the back end of the day on black box, unless it's a halt of a stock for news, whatever, or something abnormal is happening in the market where you're having stocks are still, meaning, because basically what it is, it's a volatility kind of based indicator, or a scanner, meaning when the abnormal volume is coming in or money is coming into a certain stock, which is rare at this time of the day, because most of the biggest money that's made in the market is made between 9:30 and 11:30, 12, then 12, basically, right? That's when most people flood the market, like rush hour traffic of trading. You still have people that's making abnormal investments at this hour of the day. And guess what that alert was right there, guys? That was the TIVX, meaning the VIX, the volatility indicator, right? It's the VIX indicator. It's popping right now. People are buying. Again, let me see if I can do this real quick here. I just got this new little Streamlab thing to kind of start doing my live streams again through. All right, thanks to the NBK family. Right. So real quick here, let me see if I can do this here. If you guys want to come on too and discuss what you're kind of witnessing here, again, I'll be on by another 30 minutes probably. But let me see if I can get this link to this stuff. This is new. Y'all know I'm trying to, do something different here. Since Google Hangout shut down, now I have a way to kind of, do these, still come back on live and share my screen and go through all that. But let me add the link to the back chat, guys. If you guys want to come on, share what you witnessed today in the market, what you may have seen, or how you're kind of, I guess, assessing this situation, how to assess it. You just want to talk about it. Hey, that's the link. Come on, let's talk about it. But real quick here, while I am doing that here, I want to show you guys. Let me see here. Yeah, let me share my screen here. Let's do. Hold on. Let's see if I can find. Okay, I guess I gotta do the entire screen. Entire screen. Yeah. All right, so there. All right, so real quick here. All right, guys, so you guys can see my screen there, right? So the TIVX was the last alert that just came in the market right now. I mean, the TIVX is on fire. Again, this is the volatility indicator. You don't want this spiking above, anywhere above really $13 or $15, because that means the ebb and flow of the market is going to be disturbed, where people just kind of keep buying a little bit at a time. The market just keep going up like we've been getting over the past literally year, how they've been melting up the market day over day, because they've been keeping the VIX suppressed. And the more you keep the TIVX suppressed, meaning this abnormal volume coming in and out, the more you don't have people feeling what? Nervous, which will cause capitulation, which leads to people what? Selling erratically without really thinking it all the way through. That's the number one, nemesis to the stock market, is a very, very volatile VIX market. But people are making rash decisions on the spur of, of a dime, when they naturally wouldn't do that. Irrational decision, I should say, irrational decision. And so over the past, literally, let's go pull up the 5-day chart or a weekly chart on the VIX, so you can see exactly what I'm talking about. Look at this thing, guys, how it's gapped up all the way from 18 up to near 22. That's a lot for this particular asset, if you understand how the VIX market is in terms of volatility. Now let's go back to 1 month. Look what this thing has been at the 1 month aspect. It was at $13, right where they wanted to be, under that $12 or $13 range, where it wasn't really causing any kind of abnormality in the market to cause any kind of value capitulation like we have today. Since then, look at the volatility indicator. It's been picking up. It's been picking up. Now it's testing a point of resistance here up here near this $22, $23 a level, $23 level. And if it breaks out above that, oh, hold on to your seats, boys and girls. That means equity market's about to get, if they say in the Wizard of Oz, when people say your house is getting ready to go bye-bye, no, Kansas, the entire state is getting ready to go bye-bye. You're going to have a lot of people starting to sell when they necessarily wouldn't have sold, and it's going to cause a lot of stop losses to be triggered, and it can get very ugly very fast. And that's not the kind of cause, the kind of doom and gloom kind of reality, but I'm essentially saying protect yourself. Don't be overly exposed to certain stocks where you probably had a chance to take a little money off the table, and you have not already, if you got long-term portfolio, plays out there. And if you're day trading, well, again, volatility is your best friend, because this is how we make our money. Wild swings, right? Up 20, 30 points in one moment, down, 5 to 10 points in one moment. That's how you make money as a day trader. That's just the reality of things. You can't get around that. Right? When people are panicking, you're making money. When people are feeling very confident about themselves, you're making money. The old Warren Buffett quote: when people are fearful, feeling very, fearful, that's when you become greedy. When people are acting very greedy, that's when you become a little bit more fearful, a little bit more cautious. And so today, those who are not adhering to those principles are getting wrecked. They're getting wrecked because they're on the wrong side of the trade today, right? Because they refuse to adhere to some basic, principalities surrounding, this, this industry as stock investors, stock investors or traders. And so again, it just, it makes you wonder, like, man, how do we, how do we get here so fast, right? We talk about just a month away, a month, the VIX obviously is selling off, pivots here, found the bottom around $12.70 somewhere around there, $12.80, and it had just skyrocketed up here closer to a major resistance around $23 a share in the volatility indicator. Psychologically, if you're an equity investor and you've been sitting in stocks that's been up 20, 30%, 40, 50%, you don't want to see that, because that spells trouble for your position, where these algorithmic machines that trade, this volatility, they don't have compassion. They don't say, well, this is Apple, I'm not going to, sell shares in it, sell shares in it just because, it's an American company, I want it to survive above. It don't think like that. It doesn't think, from that aspect of rationality. It just says, okay, let me go find the stocks that are up a lot, stocks that are very, that meet certain metrics in terms of 52-week high value, PE value, forward PE value, profit equity levels and things of that nature, forward book interest values and things of that nature, and say, well, hey, here's the opportunity to kind of take some money off the table. And they go attack those stocks. Those are going to be the first ones that they go in and attack to sell, to start selling, automatically. And if you're still in those stocks that are up that high and you haven't taken any profit, then that could, again, be very detrimental to your P&L. Right? So, again, I just want to share that with you guys because, it's, days like today, is why, I value this opportunity as a trader. Not so much of the fact that someone is losing a lot of money right now. There are people who lost a lot of money today. They got their accounts blown up, margin accounts, this, that, and the third. But it goes back to the idea why it's important that we become more balanced in understanding how to trade the markets. And we don't become stagnant and staunch and, so convicted to the point we don't understand that there's levels to this, right? There's moments where you have to become a little bit more, pliable to be able to bend and fold to, the sway of the market, as opposed to trying to make it do what you want it to do. And, you end up losing a little money because of that. And hopefully it's a little bit, not a lot, right? That's always the, the thesis, right? Make out, cut out losses fast, right? Minimize the loss. right? Good risk management, good risk versus reward ratios, even how you go into certain stocks. Scaling in, not going all in out the gate, right? Taking your time and methodically trading in a way where, again, you can make buku boatloads amount of money if you know what you're doing, and doing it properly. So again, today is a prime example of just that. And I've seen a lot of people posting stuff, and on these different message boards like Stock Twist and Twitter, all this stuff. A lot of people are hurting right now. Man, and they cussing out Trump. They call him every kind of name that you can think about. Literally, one day ago, they were praising him. They were praising him like he was, Jesus floating in on a Range Rover chariot with biscuit wheels riding through Gravy Valley. Trump is the best. Oh, Trump is this. Oh man, man, what better, this, that, and the third. People fail to realize. This is why I always tell people, separate your political affiliation when it comes to your money. Don't get so wrapped up in personality worship where you don't protect your backside and your economic, expansion and opportunity in life. You are the king or the queen of your own castle. And these people that got buku boatloads of money can care less about your value of money. They're doing what suits their agenda. So where you may well say, no, I trust and believe in the president, I believe in it, and I'm not making this political. I'm just stating a very obvious point. As an investor trader, you have to be emotionless in this if you're a day trader. Even long-term investing to a degree. You got to learn how to separate your political affiliation from your bank account. Now, they have some similarities and values of how they're intertwined, but ultimately, if you're placing trades based on the good faith that you think, Trump gonna say this or say that, then that's the wrong way to trade. And then you're gonna lose and try to double down on the idea that you think he's gonna come to your aid. That's even worse. You never put one good tire on 3 bad, right? It's better to buy 2 at least, if nothing else. You got 3 main pops on your vehicle and 1 good tire, right? Maybe that's all you can afford. Granted, I get it, but it's better to have 2 than 1. So basically what I'm saying is sometimes you have to step back and think about, making those kind of investments before you do it, just under the idea that you think like it's a good idea to do, because you think, things are going to be a certain way when you wake up tomorrow. That's just not how to invest in the market. I'm sorry. That's not how you trade, especially because, again, volatility has crept back into the market now. What happened yesterday is old news. It has relevancy what's happening right now in the present tense and the future, possibly in the present tense, but even today may not be a catalyst of what may happen tomorrow. So you have to trade moment over moment if you are, again, day trading, swing trading, whatever. Because, again, 400 point, downtrend Monday, machines kicked you on the back of the day. Tuesday, market looked like it's going to sell off a little bit again from watching the future market. Okay, here we go, another down day. What happens? And come a tweet from President Trump. We're going to delay the tariffs till December because we're concerned about the American consumer that's going into Christmas. We need you to spend money in our market. We need you to buy products and goods and services. They don't care about your overall well-being. They just need you to be able to spend money. Basically what they're saying. We need you to the lineup of the different aisles at Macy's and JCPenney's and Nordstrom's or wherever y'all may shop at, Target. That's what they care about. They don't care about the overall well-being of you being able to be afforded the type of economy that can have a balanced supply and value to offer you products and goods and services at cheaper prices so you can really benefit from a good quality way of life. They have low interest rate homes that average people can afford, without having to jump through hoops and go into amounts, values of debt to be able to enjoy life in this country. Right? To have a really, really abundant surplus value where we can have a balanced, GDP in a way where everybody can benefit to a degree. Those who are, actively, aggressively trying to have a better life can agree to that, to see these things coming to fruition. From people who are making, concessions every day to make sure that you have a better quality of life, which a person, a quote unquote politician, is supposed to be able to do or supposed to be doing on your behalf if they come from your so-called area of the planet. Excuse me, or state, whatever, or a country, excuse me, to represent you. Okay, well, outside of that, the personal responsibility still falls back on you too. And so that's why I always say, it's better to be, financially literate, as you can see on my shirt, peace, power, problem, my brother Ryan McCurry, the owner of these shirts, and make that produce these shirts, right? You have to become literate about your finances in a way where you protect your backside, as opposed to putting all your trust, hopes into a politician or a person to go out there and represent you. You have to be conscious of this. So I'm saying, I'm going somewhere with this. Walk with me 2 seconds. So when today is like today, rear itself, when it presents itself, you won't get stuck holding the bag. Doesn't necessarily mean because you're taking a loss that you got to sell and take the actual loss. You can't sit and let it balance itself out. You may have to wait a little longer now. Who knows? Tomorrow could be a 1,000-point swing to the upside again. But all I'm saying is, if you're trading this properly, well, guess what? If you was hedged today, if you hedged your positions today, meaning you also traded some other assets to kind of make sure you get some of the losses back that you might have occurred today because your long-term investment got beat up today, then guess what? You would have balanced yourself out and probably even walked away with a little bit more profit because you took the necessary steps to also benefit from this abnormal movement and volatility in some of these stocks being pulled back today. Keep in mind, y'all know how the saying goes: bulls make money, bears make money, and pigs get what? Pigs get McDonald's, right? Nope. Pigs get to go to Disneyland. Nope. Right? Pigs get to ride in a new Range Rover. Nope. Pigs get what? Pigs get slaughtered. And so that's what you're having today. You're having a lot of people who are starting to, eat a lot of crow today that have been speaking highly, arrogant about the trajectory of the market as a whole in terms of how it's going to continue to go up and to the right, because they've been conditioned to feel very complacent in their ideology to think that nothing can go wrong at this point. We were there literally about a month or two ago where, bad news was good news for the market, and good news was even better news for the market. Now, how does that make sense from any kind of rationale of balance in terms of duality? Balance, bipolarism. If good news is bad news, and if good news is even better news, well, where's the balance in that? But yet these greedy behind jokers down on Wall Street had people thinking, we're just, just ride the wave. There's no downside to this, end of this. So what they say, buy. Keep buying. No, just keep buying. Don't worry about it. You good to go. Keep buying. Of course they're going to say that. They have a mandate to always profess a bullish disposition because they got clients that pay them to help them make kind of investments that are going to yield them money. And most of these are bullish type investors. They're not, you don't really see, bearish hedge funds out there, right? I mean, they're betting against the market because by default, the market's supposed to go up. We get that. Granted, I get it. But if it was not a need for consciousness, clarity, balance, you wouldn't have a bearish thesis. There will be no need for a bearish thesis, meaning to bet against the market, meaning stocks are up too high in their valuations, right? They're in the fluff zone right now. They're very frothy, right? We need to pull back a little bit for the next wave of people can come in and buy that at a more discounted price. What these greedy jokers have done, they ran the prices up so high on some of these stocks up 200%, 300%, 400%. Again, Beyond Meat is up like what, 500%, 400% since the IPO back on May the 2nd. Again, that's one of the stocks I was advocating. Granted, I know I was a big proponent of Beyond Meat. I've been researching Beyond Meat like 2 years before it even went public. A year and a half, at least about a year and a half. Right? The idea of what it could do as a disruptor. Now, okay, well, as a long-term investor that may have shares in it from a long-term haul, I still see balance being, a thing that I need to obviously be very aware of. It's up too far and too fast. And at some point, it's going to have a very, it's going to have a rude awakening when they hit a point where the lockup period ends in October, and people who are buying it early get a chance to sell their shares because they want to take advantage of this stock being up this high when they were buying in at $15, $20, $25, $45 around the IPO value, but some of them got in early on the par value, per their agreement as early investors. They want to be able to capitalize on some of these prices up here near $100 foot. What you think that's going to do to people who's buying it up at these prices now, thinking it's going to go even higher at this point? It very may go up higher. Who knows? Excuse me. But ultimately, these people are going to get stuck holding the bag because they bought in at the top. And people who are waiting to sell cannot wait to sell when they have the opportunity to sell, but they can't because they're in the lockup period. Well, you say, well, how do you know all that stuff? That's why it's important to understand everything to the best of your ability to make sure you protect yourself or hedge yourself even through the knowledge as much as possible. That's why it's important and it's almost imperative that you study every aspect of this opportunity to benefit you in times and moments just like today. And you're not necessarily guessing your way through this process. Again, we all learn in stages, granted, but don't be overly exposed in a way to the market in terms of your income and your money, your hard-earned money being out there, if you can't quantify it to a certain degree where it makes you feel comfortable to lay your head down and go to sleep at night. Because now you're gambling more or less and you're making actually good, sound-based, educated decisions based upon, every available data point that you can obviously reference to make yourself feel very empirical about your opportunity. Because it's about consistency. Again, it's about base hits. It's about getting on base. Right? And so, again, I just want to kind of, reference that, guy. I know it's been a minute since I came on. I've been trying to, get myself up and going ever since the shutdown group and hangout. I need to kind of get another, streaming platform that I can kind of come on and, utilize at this point. Y'all know I'm cheap. I should have been paid for some of them big services out there to say, you know what, I just pay for them and run it. But I'm cheap, I'm frugal for a reason, because again, I understand the power of wealth building in a way where at some point, I want to be so financially secure that where I can pass up on not only just my family and my friends, but to in my environment in a way where it can benefit and be impactful. So, to me, $5, man, hey, that's an option contract. That's how cheap I am, bro. If I could take $5 in an option contract and turn it into $2.50, then what does that tell you? That means there's a person out there right now that's in the drive-through line at Taco Bell to get him a slab of, no, I ain't, throwing no shade on Taco Bell. Some of you guys may eat there, but even to get him a taco of horse meat and some GMO lettuce and some neon tomatoes. And it's gonna hurt his stomach later. You're gonna have indigestion or whatever. You're gonna have gas later from eating it. When he could have put that $5, went home and made him his own sandwich. At least he would have known what he would have, and put that $5 towards an option contract in a stock potentially. And came back later, if not just a day, but maybe a 2-3 day later, a week, 2-3 later, and that $5 might have turned to like what, $15, $20, $30, $40, $100, $200, $300. Case in point, Macy's had earnings today, right? They had contracts on Macy's as low as $5 and $10 for the strike price, about $1 or $2 away from its current price. I actually played a lottery play. We call them lotto plays. Y'all know what lotto plays are. And Macy's earnings. I had a feeling they was gonna lose or miss on earnings because all the metrics were there that retail's getting slammed right now. Macy's can't compete with Amazon and Shopify and Etsy and all these online shopping stores now. They're crushing retail stores now. It's expensive to own a brick and mortar business right now in this day and age of consumerism. People are doing a lot of this stuff online now. Online businesses are popping up out of the woodwork. So that's going to affect the foot traffic that happens for what? Stores like Macy's and J.C. Penney's and Nordstrom. Y'all get it. It's supply and demand. We understand it because we're investors. A lot of our people that don't understand the stock market don't understand what we're talking about now. It sounds like foreign language to them because all they know how to do is consume. They don't understand the power of margin, cost of goods and services, and how this EBITDA, how this stuff matter. Price to book ratio, free cash flow. They don't understand this stuff. They're like, man, whatever. Let me just drive down here and get it out. So again, the power of knowing this data is revolutionary in aspect of how to utilize it to your benefit if you know how to do it properly. So the same way, again, we can take $5 and blow it on the $5 fill-up box at Kentucky Fried Chicken or $5 value meal at McDonald's. You can take that same $5, put it into an options contract where they'll trade literally at $5 or $10 a contract for Macy's. $17 strike price puts or $16.50 puts at $5 a contract, and the stock dropped over $3 today off this earnings from $19 all the way down to like $15 and some change. Your $5 contract you bought, or your $10 contract you bought, or your $15 contract you bought turned into $100. A contract per contract. Let that marinate. My $15 contracts, they were on $15, so I bought a good little amount of them. They were cheap. They all turned into like $107 a piece at the peak point, and point where I sold some of them. I kept a little few of them, but you know, between $80, you know, I was, the cheapest one I sold was like $74. So between $74 to like $108, those contracts were worth, you know, that amount off one $15 contract. So again, people can't tell you, you know, that there's not opportunity in that kind of reality. In this kind of market environment where you have this volatility that's crept back into the market and stuff is all over the place, this is a good time to kind of understand how to play the other side of the market. I mean, if you're just a bullish trader, nothing wrong with that, but learn every aspect of it. Don't become too myopic in your value to be a visionary and how to utilize, you know, this opportunity to benefit you. You know, y'all know what I know. And man, this is like the funnest thing you could ever learn how to do. You can literally have fun and make money at the same time and have no middleman telling you what to do, when to do it, how to do it, where to do it, and all that kind of stuff. You got to realize the power in that. There's no Mr. Charlie's in the way. None of that stuff. It's you, good decision making, and the market. And if you learn how to play the game properly, again, there's no cap, there's no ceiling, it's limitless. Just imagine the amount of people that was hedged today that paid attention to the future market last night or any kind of data that came out today. Even when the yield inversion that happened today that caused us a lot today, y'all know what time of the morning did it happen at? The yield inversion that caused today's sell-off, guys, that it happened today at around 6:30 something in the morning. Now, how many of you guys were up at that hour? Some of you guys probably be up more than that if you got family or whatever, but how many of you guys were up at that hour today? And if you was, how many of you all thought to check, you know, the Treasury market to see what the bond market was looking like, knowing that it was in red flag territory from the previous day? Or you might just went online and check it from your normal brokerage account, your TLT. The TLT, the 10-year, and the TLY, I think is another one. Those are the different, you know, the 30-year fixed bond or the 10-year fixed bond. How many people thought to even think about checking that? Instantly, the sell-off in the market began to pick up steam a little bit after 7 o'clock a.m. Then 8 o'clock, it picked up more steam. At 9 o'clock, it picked up more steam, meaning the sell-off started happening and get more rapid. When the market opened up at 9:30, y'all saw the rest is history. The rest was history. Because news started to matriculating out now. Now people are like, yield inversion. Yield inversion. They were already a day late, so to speak. Right? It's one of those things that we say in corporate America. Right? I was sharing that with my sister Monica the other day. Right? If you're on time, that means you're late. If you late, that means you fired. Our goal is to be ahead of the game in a way where we're still in unison with the overall aspect of how the market is moving. So those things or those data points do matter. Not that you have to devote all your time and energy to checking the TLT and the bond market and this, that, whatever. But these things only take a couple seconds here and there. It's just the idea of knowing that, okay, these are other reference points that I can also utilize to make sure I'm not overexposed in a moment where the market may catch me blindsided. Any given moment, Trump can tweet something, right? In any given moment, China can retaliate. Because at this moment, they hold all the cards in their hand. Trump blinked first. That means he lost. This last round of threatening and chess, he checkmated his own self. He boomerang daggered his own self. He threw the boomerang out there, the so-called hit China. Not only did it miss China, it came back and hit him in the head. Y'all little comedian when they be on stage and they be like, yeah, you'll get beat down and they be in them little sign and face like he done boomerang daggered his own self. And the market punished him today because of it. Again, remove your emotions away. If you like Trump, if you don't like Trump, it's not about that. I don't care about all that stuff. I care about how can I stay consistently profitable or help others see the value and learn how to access this opportunity. That's all I care about. Because these people are made men already. Trump got his money. You trying to get yours. Don't let people sideline your opportunity. Hundreds of thousands, hundreds of millions of dollars been made today off this level of fear, capitulation. Billions of dollars were made today off this level of fear and capitulation. Trillions of dollars today was made off people's fear and capitulation. There's nothing stopping us from learning how to do this at the level that, the average Wall Street investment banker or hedge fund or pit crew worker down the world, there's nothing separating us from them besides capital. And sometimes obviously a little knowledge, but you're getting there. You're getting there. There's no certification process for this. You don't have to go to college for this. You don't have to have an 800 credit score for this. You don't have to have extensive history work background to learn this. You don't have to have a squeaky clean criminal record for this. You don't have to worry about having children or child support as a deterrent for you learning how to do this or being able to access this. None of that stuff matters. Default wise, it's the greatest opportunity one can endeavor on if they understand the power of how to be a real sound entrepreneur at the most heightened level a person can obviously endeavor to be. Because again, there's no middleman. There's no humanistic error on a person not showing up on time or this, that, and the third. The market is always going to open up when it says going to open up. If your capital right and your knowledge is on point, then guess what? The bank account is going to be right after following all those things when they line up. And to determine how leveraged you are will be a determining effect on how much you walk away that day. I was just in one room, man. One joker, he up like what, 75,000 today? 75,000. Excuse me, my little hairpin that came out. I got the old, quick fix hairdo deal. Up like 75 grand. Right? So again, what's our excuse? Well, again, we getting there, but at least being in the right place at the right time, that's what matters most. And that person was in the right place at the right time, and they utilized and capitalized on this opportunity based upon the conditions that were dealt to them. And so that's why I keep saying, we have to realize our power, right? We have to realize our power, right? And being able to access this market. So again, I just want to share that with you guys. Days like today, it's just like, man, we have to realize, who we are, where we are, and what we're trying to accomplish. And we have to stick close to our goals. We have to realize the power that we possess as investors and traders, and being able to utilize this opportunity and stick to our guns, right? Stick to this opportunity, right? So, again, we have everything we need. This is an ongoing process. This is our evolution in its own right. Nothing stopping us from, from getting to where we need to go. We have time on our side. You don't have to rush nothing that's not necessarily there. Just realize, that, you look, you're not handicapped. You only handicap yourself when you stop wanting to ingest knowledge. When you stop wanting to receive knowledge, that's when this stuff can become problematic, right? That's when it becomes problematic, right? Outside of that, get after the bag, guys. Let's get after this bag, right? Because that's what matters more than anything, right? We worked hard to get here. We don't want to make emotional decisions. We don't want to do things that's going to be problematic to our overall well-being. We want to make good, sound decisions, and we want to do it in a way where our confidence determines our conviction, right? We don't want to be out there just guessing and throwing, like playing Papa Shop. That's fine, or Papa Shop, whatever it's called. That's fine and dandy to a degree, but ultimately, again, it's not warranted that we be out here making those kind of decisions. It's just not necessary. Right? It's not necessary, right? So again, I just want to leave you guys with that. Again, I hope you guys have a wonderful, remainder of your day. I hope you guys, find value, in, being able to assess these kind of moments. Don't let it kind of, put fear in you, this, that, and the third. Just make good decisions. Take your time, think through it. Let the chips fall as they may, right? So again, massive sell-off today, right? And so I know y'all guys, got made a big bag. I know y'all got me. I ain't got to say. I know some of y'all probably did. If I know some of y'all trade. Oh, I know y'all would get to the bag today. I know y'all were eating really good today, right? Because you realize the power. You realize the opportunity. You understand the strength of someone else's, greed and or fear that can lead to money. We don't want to capitalize on nobody's misery, but again, if they doing this, they know enough to know what's going on. This ain't just like some blind person out there. This is a field where you know enough to know that you need to be very, very conscious of what you're doing, because you can, and will lose a lot of money if you're not. If you're making those kind of, emotional decisions and, things of that nature, right? So again, just want to put that out there as if you guys didn't already know that. Again, of course, you guys know this, but, it's important. It's very important, right? So again, we want to be, again, cognizant of that. And we also want to make sure that, for whatever it's worth, going forward, we realize, the power in knowing that, we have to, think it all the way through. Don't just get caught up in, the here and the now. Think it all the way through, guys. Take your time, think it all the way through. Right? Much as possible. Again, what, why, where, and when. Y'all know my little motto, right? Think it all the way through. Right? And then, from there, we'll let chips fall as they may. Right? We'll let chips fall as they may. All right, so again, I'm ready to get off here, guys. I do got some errands to run here on the back end of the day. I did want to share that with you guys. Again, I got a new streaming service I can come on now. Right, since we went down on Google Hangout, we still in the game, right? We still in the game, like cool in the game. All right, so now I have a platform where I can come on, share my screen, still be able to get to some trades and things of that nature. Business as usual. Business as usual kind of reality. Right. And so again, I'm just happy to be able to share that with you guys, and just be a part of the, back in the fold again with you all. And so again, I look forward to being able to do more live streams, and you guys come on for a change, be on the bill together. so we can discuss this stuff in real time. You know, we can go with, you know, this stuff in real time, right? And so, you know, again, it's always great when we can do it, you know, from that perspective. Yeah, when we can kind of share, you know, the camaraderie of the knowledge, so to speak, right? And so I hope you guys benefit from it. Right, so again, I know you guys. Let me see, we got a few family in. So yeah, what's going on, fam? I see you guys in the house. And over Chris, my brother, family, Triple J's, Eve, but Monica, my family, over Marquis in the house. I see your family. Overseas in the house, over Gordon in the house, definitely. Over Derek in the house. We have Eve, Queen CB in the house. Good to see you guys. And anybody else that might be watching, you know, that might be busy. I understand. Again, it's an honor and a privilege to be able to come on before you guys. As I always say, it's always an honor for me. So again, I just want to make sure I don't go without saying that. So peace, power, profit, guys. Let me get ready to get out here and make this little move. Hopefully I'll be back on the, you know, get a chance, you know. I think we actually it's Wednesday, so we're at Urban Economic Empowerment Show tonight. So make sure you go subscribe to Data Squad, the Brother Garfield channel live, so you can be a part of the Urban Economic Empowerment Show tonight. So Monica's always, you know, dropping all kind of gems, diamonds, literally at your footstep, so you can benefit from some of this financial literacy knowledge, right? And so again, these are things that we're trying to do to kind of what? Increase the economic or financial prowess of our, you know, of those who want to be a part of that, you know, that fold of information. All right, so definitely go subscribe to the channel if you're not. Brother Garfield Live verbatim, Brother Garfield Live, go subscribe to the channel, and then you'll get a good dose of the Urban Economic Empowerment Show tonight, you know, live by Sister Monica. So again, hopefully I'll be able to make sure I'm back in time of doing what I got to do so I can be a part of it too, because I love being a part of the family and sharing, you know, this kind of, you know, this data and this knowledge, right? Because it's you know, it's beneficial. You know, this is good, beneficial. I look at it this way. Let me get out here. This is actionable intel, all right? There's one thing to have knowledge, but there's another thing to have actionable intel. This is actionable intel. Right? You can take this knowledge and go do some things with it, right? It's not like people just say, hey, you know, I got this, or we this and this. No, you can take this knowledge and go put it to work immediately. Or back in the hood, immediately, right? Immediately, you can put this knowledge to work. And so that's why I like this, you know, I enjoy this, because this is a, you know, hands-on, you know, boots on the ground kind of way of being able to kind of access capital, you know, leverage opportunity, and be your own, you know, owner operator, so to speak, your own entrepreneur out the gate. You literally become your own entrepreneur out the gate when you learn how to invest in the equity markets. Right? Again, it doesn't require a PhD, a BA, MBA, none of that stuff matters, a vocation. You don't need none of that. This is just basic raw data interpretation, data extrapolation. Learn how to, you know, read through all the fine line. Ain't nothing complicated really about it once you realize the power of understanding, you know, consumerism. That's what moves markets. Either you buying or you're not. It's supply and demand. It's very simple as that. The jargon becomes a little bit more technical, granted. The charts and all that, learning that becomes a little bit technical, granted. But you'll learn it too. It's no different than reading a bar chart. You learned that in high school. How to read a graph chart. You learned that in high school. Right? So again, you know, the rest is on us. We just have to get to it, guys. So again, I just want to leave you guys in that. So again, peace, power, and profit to you all. Salute, Wakanda, all right, the whole nine. I hope you guys enjoyed this bill. I know it's impromptu, it's a short-term, you know, a short-term reality, but I want to provide some kind of value, content, clarity to what we got, you know, have in terms of this yield curve inversion, and how important that is in terms of what we need to be looking out for going forward, right? And then hopefully tomorrow I'll be fortunate to be able to come on again, and we'll have another conversation, you know, surrounding this very conversation, right? All right, guys, so that's it. So let me get out here, go and make these moves. Again, salute to you all. Thank you, guys. I'm humble. I'm Bantu. I am because we are. And I look forward to the next build that we're going to have here, guys. So until then, my very best to y'all. And I look forward to seeing you guys on the battlefield of the stock market. Right? All right, guys. Peace, power, profit.